It's live,
Hi,
Oda.
Ken.
Hi.
All right, this is not live. This is just a recording.
Okay.
We went through this, yeah? So, price structure. This is our chart. We have price and we have time. On the x-axis, time, and on the y-axis,
Price.
price, correct. And this is just a chart. And we have, what is this? Uptrend or downtrend?
Up.
Uptrend. Easy. And then we have lines. Very simple. We keep it as simple as possible. What could this be? This is a line here. What kind of line is this?
Wait, I can see. This is short.
Support, right?
Support and sorry.
Right, right.
Support.
You said
Or
that.
support.
You said. And then we have something like this, a resistance here and here and here. This is this might be important later on.
Okay.
And if we buy, we're gonna buy something because we said it's an uptrend. So let's say we buy here, okay? And we have a portfolio, so our maximum money at the moment is 10,000, and we're not risking more than 1%. And 1% of 10,000 was, what was it?
100.
Was 100, correct. So we cannot risk more than 100. And let's assume the risk is now noted at $50. And here we have a support line at 40. And we don't want to risk more than, let's say, this much. So it's
Support line is the unten. This is 40.
yeah, this is support. Okay,
Can you make
let's
a
say
clear
we
color
put
on
we
that
put
one?
our stop loss at 35, okay? Down here.
Mm-hmm.
If it goes down this way, we are wrong. We are
Okay.
wrong with our assumption. It goes down and down and down. We're losing how much per stock, per deal? 50 minus 35 is
15.
15.
15.
15, correct. And we have 100 at max. So what is 100? How many times?
7.
7, something like 7.
7.
We don't
7.
have to
7.
be that precise, but it's quite good already. So we can buy 7 stocks, correct? And then if it goes up, that's good for us. If it goes down, we lose. We lose 100, and that's okay. And that's okay because if we lose once, we lose 1%.
Okay.
If we lose twice, we lose 1%. If we lose 3 times, we lose 1%.
Because
But
we have
then
seven.
then once in a time we make 5%, and then we're good because 5% minus 3% is
2.
2%. So we have 2% profit. So we have to go slow and we have to go steady, but we have to really, really, really risk our risk. We have to manage our risk. That's what we have to do. So lots of times I'm mistaken. I'm really mistaken. Here I was mistaken, then I was mistaken, then I was mistaken. But then I make like 10%, and that's very common in the markets. And then I lost 4 times, maybe 5 times, but I made 10%, and then I made 5% still. So we have to look out. Even though we're losing more, most of the time we're still winning in the overall game. You can lose you can lose 8 of 10 times. 8 out of
7.
10 times you can lose. It's no problem. If those 2 times you win, you make more than 5%. For instance, that's just an example because then you lose 8% and then you make 10%. You still make profit. And even though it's very little, makes a big difference in the long time. And I
No.
want to, yeah, in the long run. Now I want to show you a few stocks. I work with someone else. He gives me good tips. He rates them in A, B, C. So B is something like 1% risk.
Are you showing me right now? I can't see.
You
Oda.
can't see my screen.
Yeah, I can see.
You can't see my screen.
I can't. I only see here the whiteboard.
Oh man, I'm sorry about that. This is what I was showing. I lose 1%, I lose 1%, I still make 5%. I lose again, I lose again, I lose again. I made one big deal. I still get up. So even though I lose 8 of 10 times, I still make money. When I make those 2 times that I win, I make more than 1%, which is normal.
Mm-hmm.
Yeah. So in your brain it will be like, oh no, I lost, I lost, I lost, I lost. But then the times you win, you win big time.
A little
Okay.
bit headache.
Huh?
A little bit headache.
That's okay.
But I'm learning.
Yeah. So here I have
Very for
a list of stocks,
what's big.
and this is as short. So
Okay.
we're selling the stock. We have an SL stop loss at 7.5.
That's Bitcoin, oder?
No,
What day?
no crypto at the moment, just real time stocks, just real stuff,
Okay.
real businesses already. Crypto is the future, but not at the moment. It will come again, but not at this moment. We're having July 2022, and crypto's at the bottom, the stock market at the bottom. And short means we're selling, so we're going for downwards movement. So we are betting, we are thinking that the market goes down even further. And I have a few tickers here. These companies, my colleague, my partner, he found these, and he gave me also his stop loss. This is this number, and then he has a rating. A is a very good rating, so we can risk more. That's a 2% risk. B is a 1% risk, and C is a 0.5% risk. So very little risk because we're not sure. The sure you are about the technical analysis that you can see, I mean, the better your risk. So here we have the stock KLXE. Anyone wondering, this is Interactive Brokers, my broker of choice, because it's very cheap to use it. Okay, how can I use this?
What are you looking
My
for?
God, why is this so difficult at times? Interactive Brokers is not the most easy to use broker, I gotta say, because you have to use your mouse wheel for everything. Anyways, let's go and see. I don't want to use the MACD right now. So here we have the chart. These are candle bars, and we are now at 4.5. You can see that, Ken? The price
Yeah.
is now at 4.5. And he said, put in a stop loss at 7.5 at 1% risk.
Oh, okay.
So we have, why did he say 7.5? 7.5 is, let's put it in, horizontal line at 7.5 is right here.
Yeah.
Okay, so he thinks that it might go back to this line. So he thinks it can go back from 4.5 to 7.5. That's a lot. That's a lot. But so he gives it a lot of room to breathe. It's like he trusts that it might come back to this number. But then when it comes there, it should be cancelled. We pull in a stop loss. So what we do is we're gonna put in a sell order. Why sell? Because we're going short. It's like we borrow this from the broker and then we buy it back when it goes down. He thinks it goes even further down, and I trust him. Look at this. This whole thing looks like a down chart, like a downtrend. Look at this.
Okay.
See?
Yeah, yeah.
It goes down and down and down and down and down. So I believe him, and he might be right. Let's put in another. So I connect these lines here. You can see those pivots, and let's put another one maybe here, and then we connect as many dots as possible, and we can see it really goes down. And yeah, I removed the lines now because it's too many. And now let's go to 7.5 again. This is what he thinks. Now we have to calculate 7.5 minus 4. How much is that?
2 point something.
Yeah, 7.5 minus 4 is, what is that? 3.5. Okay?
Yeah.
3.5. Alright. 3.5 is the loss. I would lose per stock. Now we have a portfolio of $3,000. $3,000, and I want to risk 1%. 1%. That's my risk. So I'm risking, what's 1% of 3,000?
100.
300 is 10%. 30 is 1%.
Yeah.
How many times can I buy the stock? Once, twice, 3 times, around 10 times. Because
After
3.5 times 10 is
10.
35, right? So I can buy it 9 times, 8 times,
9 times.
8 times, 10 times. I just go 10 times. Fuck the $5. Oh, sorry. Never mind the $5. I will just go like this. So I put in I sell order here at market because I don't bother about the price at the moment. This is regarding order types. This is a different lesson. We can look at this at a different time. But right now, I just go in the market and say, you know what? I just buy the price right now. I don't care. So, and then I have a stop, and it's at 7.5. 7.5. So I change here the price to 7.5, and that's it. And now I transmit this order, and as soon as the stock market opens, I will sell this stock 10 times with my money, and then I will let it sit and wait. I will just wait. And as it looks, this stock might be falling. You know, if I look again here from this perspective, I can really see it goes down and down and down. So it came back a little bit, but it's probably going down as well. And if it doesn't, I don't care, because I will lose max of $35, which is okay. Because I have like, what is it that I have? Where's my net? Ah yeah, I have Euro cash 2,400 and US dollar cash 1,400. So what's that in total? I have no idea. 4,000?
9.
So I have like here the total of 4,000 euro, something like that.
4,000 euro.
So I was wrong. I had a little bit more money in the bank. But it's good. I said 3,000, but actually I have 4,000. Still, I risk less. Okay. Anyways, anyways, I transmit this order, and he shows me again that I will buy for $40. He will commission, that's the money the broker's taking for putting this order into the system.
Okay.
And here's the true equity. I have just 3,200. So I was right, 3,200. And it will change because I pay the commission right now, and then the rest is not important right now. And it's a fossil fuel company, so it's an oil company. So it's just flagged because if I'm environmental, like I want to just invest in sustainable energies, I know that now, and I'm going against it because I'm shorting it. That's actually, I'm selling fossil fuel, meaning I'm not for fossil fuel. I'm against the business principle. Anyways, I'm selling it, and this order will be filled at the New York stock market when the New York stock market opens, and that will be at 3 o'clock, because right now, as you can see, it's 6 o'clock and the market opens in 3 hours, so at 3:30. Alright, this is one trade. Let's look at the next one. This will be DBI, and with a stop loss of 15. Let's look at DBI.
It's company, yeah.
Yeah, it's a company. I don't even care what the company is doing at the moment. I'm just trusting my partner with the technical analysis, and I just look at the chart a little bit. Let's look at weekly. Weekly means every little thing here is a week. You see that?
Okay.
This is a week. This is a week. Overall, it looks good to me. I'm not so sure why he's against it. Let's look at the monthly. Is there monthly? It doesn't look bad. I'm a little bit surprised that he... Okay, so he thinks it goes down. Okay. I'm not so sure. Let's look now daily. Okay, I see now what he means. So he has this point in mind, and it's going down. Since then, it's going down. And even though it has come back a little bit, it's still going down. See that? So it went down, 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 down.
It's ambition. This in the chart.
Yeah.
And read a little bit now the charts, unlike before.
Yeah, unlike before. So you give yourself some time, and then
Yeah.
This is how it usually goes. Where's my pen? Where's my pen? It doesn't work anymore.
It's quite exciting.
Huh?
He said it's quite exciting for
Yeah.
me.
It's interesting. So he says sell it. Sell DBI. We did this one already. That's done. DBI. I'm usually faster, but I'm explaining at the same time. So 15. That's where he wants it to be. That's where he wants the stop loss to be. Let's go again. 15. Right here. Okay. And we are at, what's the current price, Ken? Can you tell me?
Let's see. The price.
Here you see it in the yellow box.
13.29.
13.29. Let's call it 13.30. 13.30, and we have a stop loss of 15, and we have to subtract. What's the difference? 1.7.
Yeah.
Yeah. You get better with this by time. 1.7. Again, we don't want to risk more than $30. How many times can I put in the 1.7 into the 30? I don't know that. That's too difficult for me. So I use my calculator. Something like almost 20 times. I would say 15 times.
15.
17 times. Okay?
Yeah.
17 times. So I will put in an order and I will sell 17 times. And I will also put in a stop loss 17 times. 15, why not? 17 times, where's the stop loss? At 15. Whoop, whoop. 15 limit. Now we want the market to open and then to execute our order. We don't care about the little price differences of ask and bid. And this is it. So if this opens, it will sell, and if it goes against us, here to 15, then we will automatically buy back the stock. So we're out of the trade, we're out of the whole thing, and we don't care. I will lose max $30, and that's that. So I can go to the swimming pool and chill, and if it goes against me, I lose $30, and that's okay, because sometimes I lose $30, but sometimes I make much more. So look at this, for instance. Here we invested into DLTH. We bought 20 stocks. This red means it's a short position, means we're selling, right? So we're not buying the stock, we're selling the stock. We're borrowing the stock from the broker, like this bank, and tell the bank, hey bank, you know what? Can I borrow this from you and give it back to you in 2 months, 3 months, a year? And they say, okay, just give us a little bit of interest because we're essentially borrowing you, lending you money, and that's what we do. And then we buy it back when the stock goes down. So it will go down and down and down, probably, I don't know, like this. Then we buy it back for $8 or whatever, and the difference is ours. So 13 minus 8 is like $5. Times 15 is $75. It's not a lot of money, but over time, 1 year, second year, third year, fourth year, we're gonna expand the numbers, of course, naturally, and make more money. So everyone should do this as a pastime, as a hobby. And if you take it seriously, you can do only a few deals of only a few trades, and you can make good money. I do this once in 2 weeks, only for an hour, and I make like $400. And if I make tenfold, I make $4,000. You see, this is the unrealized profit. It's in the system. It's not yet substantiated. It's not yet on my bank account.
You're making $400 per week, or the?
No. That would be great. No. This is just the numbers of the unrealized profits from the open trades. It's a little bit too much to explain all these details, but basically, if you make a deal with the broker, I mean, you make a stock trade, and the stock goes in your favor, you make unrealized profits. And then if you liquidate the position, if you like close it down, I'm shorting 20. If I buy it back now, then I realize my profits, and then I make $103. So I made 34% on this one.
Okay.
34%, that's not bad. So that's really not bad, but not every position works out. A lot of positions don't work out. Like this one, CHRV and RIG. I'm losing $22 on this one and 22. But I said my max loss is $30, and then it will stop out. And I don't care. Okay, this one is, I think, did I just buy it? I think this is done. Yeah. Did I just buy it? Let's check. DBI.
Buy everything.
And it's in the market. It's already done. I'm already done. So DBI is done. Okay, I do the next one and then we call it a day.
Yeah.
Casa 530 is the stop loss. Let's look. 530.
It's all down. Udah? Is the chart down from the other side?
Yes, we can see it's bad. We used to trade this already, I remember, and we made, I think, some good money on it. And now we're doing it again. Okay, 530. We're now at $4 roughly. So we lose $1 each. How many can we buy?
5. It's like 1. Like 530 minus 1.
No, it's 5.
5 minus 3, 4, 1.
No, you're right. 530 minus 4.
70.
530 minus 4 is
70.70.
1.3.
9. 530 minus 4 is 0.70.
No, it's 1.3.
Oh, yeah. Sorry. Yeah. You're right.
And 30 divided by 1.3 is something like 20, 10, 20, 15.
20 something? You need to calculator.
So
small number, but sometimes difficult.
So 23, yeah?
Okay. Yeah.
So I'll leave this in here. I put the stop loss at 530. And then I transmit, and that's it. That's it. Done. Okay. The rest I will do alone.
Yeah.
And I hope this was of some value for you.
Okay. I'm learning.
You're learning. It's a learning process.
A little bit. What is this? I'm speaking Deutsch. I got headache.
Yeah, it's okay.
But I'm learning.
Okay, you know what? You can watch this video and then maybe pick up on it later.
All right.
And you can tell everyone in Iloilo about it. If they got questions, they
Are we
can.
done with the video?
Yeah, we're
No.
done. We're done for the video now. Let me just